Welcome back to another edition of Mortgage Chicks with Hot Tips. I'm Diana Harvey.
I'm Elizabeth Wool.
I'm Kim Harestad.
I'm Cindy Walker.
And I'm Stacey Van Schenck.
We all just got back from our national sales convention, and we call it Fly-In. And we were very, very fortunate there to hear some really good information from those executives at the top. So we thought we would bring an episode today to you called A View from the Top. And how bigger of a top can you get than Tom Vandyk himself? We are going to have a little conversation with Tom today.
Oh boy, I'm looking forward to it.
So I am just going to say I started with VanDyk in 2010, so 12 years ago. So I'm like
Okay,
the oldie
good.
with VanDyk here.
Okay, cool.
So we came aboard, we opened up the Southwest region. You were all up in Michigan,
Yep,
and
yep.
here we are.
Yep.
So I just want to say, can you tell us how the company was started, Tom?
Yeah,
Like what your
sure.
goals are, what
Yeah.
your visions are? Just
Yeah.
kind of let us know.
Yeah, well, that's kind of interesting because we did start in Michigan, and last year about a third of our business came out of Florida. So, and part of it is I'm a full-blown Floridian now. So
Yeah.
I've been down here for about 10 years. It's not very hard to move down here in February when you have a gorgeous day like today. But yeah, we started there with 3 people. And it's interesting, my partner that I started with, Tom Carpenter, I just talked to him a week ago. So, and he's still in Michigan. So he hasn't moved down to Florida yet, but
He'll be down here. I'm sure,
yeah,
sooner than later.
yeah. But without all the boring stuff, that was back in the age in 1987. We didn't have computers, no iPhones, no fax machines. A loan originator would go around and take their stack of price sheets, and they'd go around to each. Do you remember doing that?
Yeah.
You guys
Pizza.
are laughing.
With
So
pizza, we all know it.
some of you have been in the business more than 12 years then.
Yes,
But we'd go around and put them on. As a loan originator, I remember pulling into some parking lots. And I had that stack of rate sheets in my hand, and then I'd drive out. It was just too fearful. You ever do that?
Oh,
I mean-
yes. Many a time. I hated cold calls.
Dial the number, hang up real quick.
Yeah, and it's just like that telephone. Did that thing bite me, or what happened here? But anyway, you got to get over that little fears, and they still exist today, which is kind of interesting. But anyway, long story short, without boring everybody, we got through the 07, 08, 09 debacle, which was probably a big one, and all the subprime things like that. So today, starting with 3 people, we've got approximately 550 people. And we service, our servicing portfolio was up to $3.7 billion just about 6-8 months ago.
Wow.
And then we sold a piece of that off. So we're a full-blown mortgage banker today. We're in 44 states. And we do everything from, Fannie Mae, Freddie Mac, Ginnie Mae, all the subprime. There's really not subprime out there. They call it Alt-A now. Mm-hmm. And then we'll broker to different investors, and we have, we're hooked up with a lot of different big boys like Wells and Chase and Penny Mac. We just got approved with Redwood, which is a big hedge fund. So the market's changed, but people are the same.
So you started with 3, and now you're 500 plus.
Yeah, 550. Yeah.
Wow.
Yeah. Yep. In the heyday, and that was before licensing. You could. We started. There were no licenses. You just started.
Yeah, when I got into it, you didn't have to get licensed.
Yeah, we didn't have a license.
Yeah, we. One of our first investors, because we were just a broker, we sold to a company called Washtenaw Mortgage in Ann Arbor. You're shaking your head. That they were a big wholesaler,
Yep.
and their name came from Washtenaw because it was Washtenaw County. But no licensing, no CFPB, no real compliance. It was just a Wild West. So, but then as the abuses started happening, and literally loan originators were in the industry was kind of taking advantage of some of the consumers.
Charging lots of points.
Yeah, charging lots of points, more than really what they deserve.
Exactly.
And so really the big demarcation, there was the Barney Frank Act that came in. And I won't say I'm 100% supporter, but that act did a lot of good to really protect the consumer, and the CFPB came in. So we don't really have a lot of problems, dealing with all the compliance. Although what an interesting fact is, when we started, 80% of our people, and pretty much all the way through up until about 2009, 80% of our staff was salespeople, 20% admin. Today,
Wow,
Yeah.
big change.
Oh my gosh.
today it's about 2/3 admin and 1/3 sales.
Wow.
And a lot of that's because of the compliance and the regulations that we gotta follow. So, yeah, we got an audit going on. We got an audit going on literally every day, because we have 44 states. Every state does an audit or two a year. Then you've got Fannie Mae, Freddie Mac, Ginnie Mae that does an audit. Then we've got we have $240 million in warehouse lines with 4 different warehouse banks, and they're auditing us darn near every month. I could have threw a swear word in there.
It's the mortgage chicks. You can do that. We're on cable.
We have bleepers.
Right, but we have to reconcile daily with all the warehouse banks, and during 20 and 21, we were doing 800-900 1,000 loans a month, which gets up to be around 200 million a month. So you got a lot of activity going on and a lot of money flowing back and forth, and everybody that's lending it to you is watching you. So.
Where do you see VanDyk going from here?
Oh, where do we see? Well, we've exceeded. It's very interesting, because when you do goal setting, it's when I looked at 2020, okay, and we do goal setting every year. We get to every one of our originators and the regional managers, and I pound on them. Goal setting's kind of a guess, okay, but it's an educated guess. What would you like to do? And I use that because we have to have enough staff, we have to have enough underwriters, we have to have enough shippers, deliverers, missing dock people. We have to have enough warehouse lines. In 2020, we went, or in 2019, at the end of 19 for 2020, everybody missed it. Okay, everybody missed it. The MBA missed it, and we ended up doing 5 times the business we thought we were going to do. And what happened was we fell behind in underwriting, and we couldn't hire enough people, and the originators couldn't write enough applications. Of course, it's hard to say, hello, I'm going to drop your payment $300 a month. Would you like to do that? That's really not selling, but that was the market for 2020, which ended up to be, the boom year in the industry. And then 2021 came along. We said, oh boy, we're really going to drop off. We actually had more production in 2021 than we did 2020. We did about 500 less units, but the average loan balance went up because of the appreciation and all that. So when you say, where do we want to go? When you talk to Tom Vandyk scratching his head and having a nice glass of wine, we got all the tools to double or triple our production. We have all the agencies, as I said, Fannie, Freddie, Ginnie. We've got all the correspondent. I don't know what else we need. We just need you guys to tell me, hey, we'll double my production, and we can handle it on the back end.
Inventory.
He's right.
That's what we need.
Yeah.
Inventory.
Well, that's
We'll talk a little bit about that. Yeah.
So that's kind of my question.
Right.
Everyone talks about the housing bubble.
Yeah.
What is your opinion on the current market situation?
Crazy. This is the craziest market. When you look at the MLS, and I just bought a condo, so I have been in the last year looking for the condo, a normal buyer. I mean, I go crazy when it's my own money, my personal money. I act just like a regular buyer. But every offer has got 8, 10, 15 offers on it. And I think that our problem this year is going to be inventory. And I don't know where all the houses went, okay? Because where did all the people, all of a sudden there's 10 offers on everything. I was talking to one of our regionals, Dawn Anderson, and she says there's a big developer out there. She's out of Las Vegas. That's coming in. They're going to build 100 houses. okay, which is very cool. But they're not selling them. They're keeping every one of them as a rental.
Oh, lovely.
Yeah, so
Yeah, I've heard
a lot
about that too.
a lot of investors, now when I talk investors like this, these are the hedge funds, and they're looking at residential property because of the appreciation. They're holding them.
Wow.
And so that's causing
That's
part of the
discouraging.
shortage too. So this year, I'll depend on the audience. Well, if you're talking to a buyer or to a loan originator, we'll talk about a buyer first. You got to let your guard down a little. You can't be so picky. Okay. And I think because you got to get your hands on an accepted offer, and it's difficult to do. And I think people are getting to that point that they're going through the house, they're looking at it, maybe even just driving by it. And I've even heard stories about just looking at it on the internet, and they're throwing an offer in. No wonder you're getting 15, and so they're waiting for the inspection period. If my offer gets accepted, then I'll get serious about
If
it.
they haven't waived the inspection to get their offer accepted, because that's happening a lot.
And that can be
The
dangerous
inspection
too.
is
Crazy.
really
Yeah, you have no
dangerous.
idea what you're paying.
Crazy.
And like you go out west, there was one deal I heard, and I don't know if it's true or not, but it was from a fairly reliable source. 52 offers out in Colorado.
No, I believe it.
How on earth? Now, it went for like 25% over list. So I'm scratching my head saying, did they really list it at the right price? But it's a different marketing plan. You list it, and maybe you list it low, and you're bidding it up just like an auction. And it'll
Yeah,
be
but God
interesting.
bless a listing agent that has to go through 52 offers to determine.
Can you
which
imagine?
Pick one, yeah.
Yeah.
Can you? There's a whole story behind that too, but yeah, that's crazy. Yeah, it's just a totally different market. I think for our industry today, the loan originators have to do a much better job of qualifying the people, and the borrowers have to get their credit cleaned up if they have any issues, because sellers are digging deep and saying, what's your buyer look like? Okay, they don't want to accept an offer because there's 10 other ones that's not going to close. So it takes a little more prep time, I think, on the borrower's part and the loan originator's part to get a good quality. Clean yourself up just like you're going to sell a car. You're going to go wash it, clean it, and
Well, I have a lot of people, they'll say, well, I'm waiting for the housing bubble to burst, because I know it's gonna burst like it did in '08. I don't agree with that. I don't think we're gonna have a housing bubble that's gonna burst and properties are going to depreciate. Do you agree with that?
right. Well, I'll tell you why I do agree with that. I don't think we're going to go backwards, because I lived through 07, 08, and 09. I was on the front row, front pew, let me tell you. Lost some money like
Amen.
everybody else,
Amen.
okay?
I lost some units, yeah.
But that was a subprime era. And if you've never seen the movie The Big Short, you got to go watch that, okay? Because it was the Wild West back then. And even the mortgage-backed security dealers were in on it. We were making loans, there were pay option loans, and we were making, no income verification loans, and we were taking gross income on businesses, and maybe they'd had a net income of 0, but we used the gross income to qualify. And we had a lot of people that were just jumping on the appreciation bandwagon who couldn't qualify for the homes. Okay, that's not happening today. Okay, we're qualifying these people, and that subprime era is really, they call it the Alt-A, but it's nothing like it was. Even the ability to repay laws. We can't make a loan. It used to be, hey, if you had a $300,000 sale price and you were putting $150,000 down, what do I care if you, as a lender? Okay, I'll take that house back and resell it and make money on it. Well, today we can't even do that if you don't qualify. Okay, you have to be able to qualify under the underwriting guidelines, even if you got 50% down. So back then that didn't happen. Okay, and we were letting people borrow money as their down payment, no verification of a deposit. All that stuff's gone, and it's good for the industry.
Yeah.
Because it darn near killed the industry. I mean, a lot of security dealers got hurt, a lot of borrowers got hurt, a lot of foreclosures. And then back then I could talk a while on that subject, but valuations tumbled like crazy. You're not seeing that now. The valuations are strong.
Oh, yeah.
And so you just have to ride the wave. It's a different approach now, and it's a different market. So,
Yeah, people have equity that they didn't have before.
Yeah.
well, that's where you're going to see the refinances. I think you're going to have a lot of cash out refis this year, and people taking advantage of leverage and the appreciation. that they're getting in their houses right now. It's really amazing. I mean, some areas 10 to 15% a year. You know, it's crazy. You just watch it as you're looking to buy a house. Last month, in fact, I've never seen before on the local MLSs where they have a house listed and then they have a price change and they're moving it up. Have you ever seen that before?
It's crazy.
Never have seen that before. So, yeah, they're marching upward, but there's a lot of cash offers. I mean, if you got 15 offers on a house, typically you see 3-4 of them are cash. That's really the leader, and that's good and healthy for the industry because now the appraisers have comparables where people are paying cash. And so I don't know if the stock market tumbles, maybe they won't have so much cash, but when you got a strong stock market, you got appreciation going. I don't think we're going to go back to the same thing we had before.
Well, thank you very much. That was great information on the bubble. I feel the same way. You know, I deal with a lot of first-time home buyers, and right now it is tough for a first-time home buyer. We're dealing with a lot of tears,
Right.
lots of offers.
Yeah.
So what advice would you give to a first-time home buyer out there in this crazy market right now?
Okay, well, you know, you want to stay on your job. You want
Yes.
to, you know, if you got any credit, you want to clean it up beforehand. And, you know, you have to, I think, drop your expectations a little bit. It used to be when we were shopping for a house and we had a buyer, they could be picky and they're looking for their forever home. That's not the case anymore because you got 10, 15 offers. I don't even think that 3-4 minimum, but I've seen many at 10 and 15, where you have to drop your expectations. This may not be a perfect house for you, but if you can get an accepted contract and you're a first home buyer, you jump on the bandwagon, okay? Because we're seeing in many markets anywhere from a 5 to a 15% appreciation. So you scratch your head and you say, gee, interest rates are going up, so I got to get the best rate. But think about that. If you took out a $300,000 mortgage and because the interest rates went up 0.5%, you're paying $100 more a month, okay? But when you that same $300,000 house at a 10% appreciation rate's going up $30,000. So your payment's going up $100, but the value's going up $2,500.
Yeah.
So you got a 25 to 1 downfall. So don't worry about the rates. You know, rates could go to 5, 6, 7%. It's the appreciation and the inflation that you want to look at. And it's real.
Right.
Like we were just talking that, you know, buyers are coming in, particularly in Florida, it's crazy because you got the lower taxes and, you know, the weather and people are just driving down here from the Northeast. And you have to compare the appreciation rate to your payment. And I don't think interest rates are going to be the holdback this year. It's going to be the inventory and can the people qualify. It's getting to a point where first home buyers almost extinct. They have some bond programs and things like that. So if you can jump on those, but the problem is the pricing of the homes are exceeding all the steps. So we're still using old guidelines for new markets. Okay, our market in the last 18 months has really changed. And we're still using the old, you know, they got to bump these guidelines up. They got to increase the minimum loan amounts. They got to even more reduce the down payments where the PMI people have to get in. So there's going to be some creativity going on there.
So they need to, because I keep telling them not to take it personally. You know, when their first 5, 6, 10 offers don't get accepted, they need to understand it's not them.
It's not them because people are making offers, they're just drive-by offers. I'll throw it in if I get it accepted, then I'll get serious about the house.
But the main message is don't give up, because to give up and to put it off is only going to make it worse from what we're seeing, right?
Well, if you say that, I'm going to say your landlord's not stupid, okay?
There you go.
As their properties, if it's a single family or a rental community or whatever, the values the rents are going up. It's a lose-lose for a first home buyer right now. And they have to jump on the bandwagon of appreciation because their rents are going to go up. You got to live someplace.
Right, and at VanDyk we offer a really great program for first-time home buyers to help them get the little extra edge, which is to be completely underwritten as a to to be determined property.
Yeah.
So
Well,
that-
and the sellers are looking for that. Like I said, the sellers are saying, listen, tell me about your buyer.
Right.
And, you know, it's interesting because you go to these national companies and the local real estate people, they're not accepting those offers. They want to know who did it, okay? You know, who did Elizabeth do it? She knows what she's doing. Okay, that's the offer, Mr. Seller, you should take. Not this one from ABC who's a national and they're out in Podunk, Iowa and got a pre-approval from. So really selecting the lender that's a local, that knows the agents, and, you know, like we're calling the listing agents and giving them,
Yes.
you know, feedback, means a lot to a first home buyer, so.
Well, I like what you said about setting their expectations a little differently. I think
Yeah.
first-time home buyers really need to look at location and bones.
Yeah.
Those are two things you can't change.
Yes.
Everything else you
Bingo.
can change.
Right.
So I think maybe some first-time home buyers really think they're going to go into a house that's completely updated or modern or whatnot.
Yeah.
But it's just location and bones is really
Right.
what they should be
Yeah.
looking for.
Right, right. And
The
they'll come
old
out
curb
ahead.
appeal is going.
Absolutely.
Yeah, they'll come out ahead if they can do, you know, get a fixer-upper and put some sweat equity into it. Those things are making a difference today. Now, how long this bubble's gonna last, you know, I don't know if it's a bubble because we're qualifying people. It's not a bubble where we saw in the past. I think you're gonna see a huge decline. It may start leveling off, but it's hot right now. I mean, if you're thinking about buying a house and you wait 2 or 3 years, you may be paying 20-30% more for that same house. And so that would be my advice to them, jump on it, and the rents are gonna go up as well.
So invest in your own personal wealth and not your landlord's.
Yeah, exactly.
Well,
Yeah,
I like that.
yep.
Well, Tom, you and I actually go back even further than Cindy.
Oh, boy.
Yeah. You and I go back to even before VanDyk Mortgage
We
was established.
do, up back in Grand Rapids, Michigan.
back in Grand
Yes.
Rapids, Michigan,
Yep,
when I got
yep.
started, and you were my regional manager.
Yes,
Yes.
that's where I grew up, and you started
I grew
your
up there
career.
too,
Yeah,
And
exactly.
interestingly enough, I came down here, and then you came down here, and now here I am back at VanDyk again.
There we go.
And
Yep.
that to me says a lot about you and your character, or I wouldn't be
Well,
back.
Well, thank you. Well, that's
So-
great. Glad to hear that. That's a two-way street. So.
And we've obviously seen some craziness. The rate sheets, everything from rate sheets were passed out during those days to all kinds of stuff,
Yeah.
whereas now rates are not done that way at all.
Right.
But the one thing, you've had some great advice for people getting involved now, starting to build your wealth by home ownership. Is there any other advice or predictions that you can give people for 2022?
Well, you know, when you look at the economics, we're all coming out of COVID, right? Okay, so you got to look to say, you know, going out to dinner. I was just telling the guys, you know, you try to make a dinner reservation in St. Petersburg for a Saturday night, they're non-existent. I mean, people are spending money. They're coming off from COVID. And I think look at the overall economics. If you look at the building business, to get a builder or a painter or anybody, a contract, they're all busy. So that tells me that the economy is going to keep going. That tells me a little bit that the appreciation of homes is going to keep going. So whatever down payment you can accumulate as a first home buyer, I'd accumulate it. If you could get any gifts from family to help out to get it on, to get that first purchase and jump on that appreciation wave.
Very good advice and much appreciated. We want to thank you so much, Tom, for taking time out of your day. Apologize, we had a little bit of a noise. Apparently they're washing the windows today as we're doing this interview, so we are going to reserve the right to interview you.
No, that was the audience. They were banging that. They were banging about my answer, saying, yeah. Hey, it was great. Thanks for having me. And I just want to say, I just love those cups, and I love that little lipstick that they've got on there too. So if you don't have a hot chick cup, you got to get one. We got them in our company store.